Good morning. Alex, I thought you were on your way to beautiful Italy. All right. All right. So interesting. Yesterday, you all know, Fed news, little concerns, risks of inflation. They see slower growth and the market rallies. It's kind of a odd scenario. I get the the lack of concerns about inflation, slower growth in the market rallies was a little strange, but market hates rising interest rates, always has, but that hasn't stopped markets from going up in the past when they initially start. So interesting that this time it got the market in such a twist, and the focus on an inverted yield curve, which didn't happen. And so now I think one of the big things to watch here is bonds. You see how they're starting to inch back up here? Well, if it was such a concern here, so when bond prices go up, interest rates come down. Now, what happens with short-term interest rates at this point, now that the Fed said what they did? Do they start to drop? And if they start to drop, well, then the yield curve won't be in a threatening situation of inversion. I'll be watching this day to day to see what happens. But as these bond prices come up, yields come down, we're going to be back in a situation of the market starting to focus on that yield curve inversion. So, probably be a good idea for you to keep an eye on that yourself. But as long as you're in here, I'm going to tell you if it gets any closer to inverting. But this is what will happen if bonds keep going up. So we'll see. Now, the Nasdaq is up a little bit here. I see it's beginning to back off a little bit. It did take out this initial resistance here, which suggests it should keep going up and attack that 200-day moving average. So we shall see. The video that I sent out last night, if you're an advisory subscriber, I sent it to the advisors. I said to look out for, and it mostly relates to spiders and Qs and whatever, based on the day chart, if we get an inside day today. Because if we get an inside day, which by definition means trading inside the high and low of this bar, and then the next day it breaks down below that, that triggers a breakout bar failure. And historically, that means it's going to take out the low of this breakout bar by taking out the low of the inside bar. And then historically, again, it'll take out the low of this base. So that is a pattern to look for if it develops. I don't know that it will. Right now, this pattern says it's going to go higher since it's breaking out. And while it backed off a little bit at the end of the day, see a little baby tail there, the close, this new high close, and the basing prior to the move suggests it's going to go up. And that's what makes the breakout bar failure a potent pattern when it happens, because it sets up the unexpected. Right? The expected is for this is going to go up. So we'll see if that happens or not. Right now, the bias is it's going to go higher. Right now, it's backing off from that a little bit on the S&Ps. You see that it poked above the high here, and there was a little shock pattern. So that creates uncertainty within this move up, and it always gets some selling started. How far it'll go, nobody knows. This is a very aggressive setup to sell short. If you're not aggressive, well, then it's a good setup to step aside if you were long and sit back and wait to see what happens. As far as, does it pull back a lot? Does it go sideways? If it goes sideways, well, then that's bullish because you've had a bearish event that is somewhat being ignored, and buyers continue to step up. And if we were to see that, that then suggests that prices will go up and test the area of that 200-day moving average. Right? Those are some of the things that we'll be looking for this morning. I don't know if that's a real bar. We'll look at the futures, but some whipsaw going around there, but moved up. Same story here. Guess it's up above this high by a little bit. But, you know, if we want to look at exactness, there's the top of the topping tail. Nonetheless, sideways consolidation in that area. Gap to the high or above the high of a red bar. It continued to go higher. Suggests it's going to go higher. But keep the breakout bar failure pattern, you know, on the back burner, so to speak. And we'll see what today brings. Whether it's an inside bar, well, that's going to be something to take note of. And if it's a green bar pushing up here, well, then, you know, as I said in Monday's letter, or even yesterday, just trail prior bars lows as it pushes higher. You know, simple, it works. Russell kind of lagged a little bit yesterday, but, you know, it does that, and it has a tendency to bring up the rear when things are working out. So we'll keep an eye and see if that goes. Transports look good. You know, so overall, I mean, that's a positive that all of these markets are moving together. Not exactly, but they're all suggesting higher. You know, when it's not like we have green bars and then all of a sudden we come to the transports and there's a big nasty red bar down at the low engulfing several days. So right now it appears that everything's firing on all cylinders to move higher. And we've already got the Dow up against the 200, kind of backing off here a little bit, down 100 so far. But, you know, down 100 in the context of, well, we got to look at the futures there. In the context of this wider bar pushing up, not really a big deal. It just kind of points to, well, a consolidation at the top of a bullish bar right now. Whether it turns into an inside day is yet to be seen. But it's starting out with a little weakness, while the Nasdaq futures, well, they're backing off a little bit, but they're above the high there in the area of resistance. We'll see. Good morning, trader. And as we always do when we look at a wide range bar like this, it's kind of like we talk about events. Well, what's an event? An event is something that you look at the chart and you go like, that's something. Right? Or what Dan calls something. You know, it pops out at you and it says, hey, look at me. And so when we see this type of a bar, we just, our automated analysis, so to speak, is to say, can it stay in the upper half of that bar? And if it's really bullish, can it stay in the upper third? And so we'll see what happens by the end of the day. And we already looked at the Dow futures. They're in the upper third, but inside so far. Bonds we looked at, they're pushing up. Oil looks like it's going higher. So we'll see. So far, nice consolidation pattern. And so consolidation patterns is a concept, or an analysis concept of interpreting price action. Sideways price actions at resistance is bullish, right? Then you wait to see, does it clear the high? Or was that supply that was coming in during that consolidation, did it wind up resulting in a breakdown? And then you know you've got a new resistance area. What we have here is prices pushing above the high, and there's only one way to interpret that, is that it's going to go higher since it was able to absorb that resistance or supply there. Gold higher again. Now it's gapping. So again, trailing prior bars lows if you were in gold futures. And you're mentioning the oil ETFs in the room here for those of you that are on YouTube. And you can see somewhat similar pattern to oil there. That's one of the ETFs, XES. contains more of the natural gas stocks. OIH has, the oil service providers. So there are different ETFs for oil that have different stocks within them, but they all have similar patterns, right? All similar patterns that, so you got a retracement here within a downtrend, and it's basing. So it's created support. Theoretically, it says it's going higher. I have seen plenty of these patterns over the years because their bottoming patterns look so wonderful and bite you in the butt, meaning breakout failures. I don't know that that'll happen, but it's not uncommon for a pattern like this. And in a downtrend, I know this is a little kind of, it's gotten climactic, but if you look at a basing pattern on a daily chart that looks inviting, and you have a weekly chart that looks like this one, there is the probability of a breakout failure, more so than if you had a pattern where if you flip this upside down and this was going up and then it was going sideways after an initial breakout from a base higher versus a breakdown from a base lower. Common sense when you think about it. Nonetheless, the pattern right now is suggesting that it can go higher. So we'll see if it does. And what else here? Well, I know Dan's going to cover some of the gappers. Euro's a mess. Yen moving up. And Australian dollar. So as oil goes up, sometimes, the Australian dollar moves in a favorable direction because of that. Anyway, any ETFs? Well, internet ETF. Look, Facebook's moving up. This ETF covers a lot of different stocks. But with Facebook making its move, it opens the question is, can this ETF blast up through this high that it's up against and the 200-day moving average? And the last thing I'm going to show you is we did get finally confirmation of sentiment coming in alignment bearishly with breadth, first time since this low was in place. So another reason to keep an eye on the fire door. So maybe the breakout bar failure is what happens here, but at the moment, it's all these patterns, these equity charts are saying it's going to go higher and attack that 200. But keep in mind that historically, this usually puts you within days, if not a week or so, of a high point. It rarely marks the high day. So keep that all in mind. We'll see how the day develops here. And take it over, Dan.
Hey, good morning. I like your reference there. Keep an eye on the fire door.
Well, the first thing to do is make sure it's not locked.
I think I was using the analogy of, getting off the musical chairs or get ready to get off the ride. Yeah, good morning, everyone. All right, opens, here we go. Home Depot, we legged into a covered call, the 182.50 for tomorrow. If they take it, they take it. If not, we'll manage it like any other trade. IBB, we did a bear call spread yesterday, closed strong, rising tides, everything went up, but our stock, it's the 110s. So we still have, $2 away. Tandem, we have a covered call. BMY, we have a call spread in short stock. Dollar Tree has not triggered yet. It's actually lagging, but that's fine. Because then if it does take out last week's high, we have a bigger area of support. So, sometimes people ask me, hey, how long is the trade still valid? And the answer is, as long as the pattern is still intact. And I monitor it day by day, and I'll be the one in open trades to say, let's cancel it, or it's still valid. MDB, we have an iron condor that's still doing fine. Michael Jackson. We have a short put spread and a covered call in the ETF letter. WWE triggered yesterday in the strength. I'll keep an eye on that to leg into a covered call. Costco, yeah, we stopped out of the back half of that at a profit. NBEV, we're long stock with a stop. Today's Thursday. I moved the stop under Tuesday's low. And that looks like it. Dollar Tree. Yeah, definitely. But trader, it still has to trigger. It's still, I'm not going in that early because it's still lagging. But if it triggers, sure. And you asked me about Zen and the Facebook. It's fine. You know, you said something about you don't like this 15-minute bar, red. No, it's a pullback and an uptrend, closed near the highs. You know, it's fine. Here's some Alex was mentioning yesterday. MBFI is a short. FITB is a short. NBR is a long. That looks good with the oil sector holding. Caesar's Palace, we were watching yesterday. I was watching TGI, bullish daily. SIG, I'm watching for weakness. And I'm also watching Weight Watchers for weakness. Look at that thing. Put that in a little window, keep a better eye on him. All right, let's, there's a bunch of gappers. Workday, I think, is just, it's going up in sympathy with now, NOW 180, but that's a very bullish gap. Adobe is not earnings, but nah, I got no interest in that. DEO, that's an ADR, no interest, but that's a big old gap and a bullish multi-month year consolidation, if you were so inclined. Visa, I don't know if this was earnings, but, oh yeah, it was yesterday earnings. So that's very bearish. It's gapping here. So that's a call spread candidate, 30-minute low. So when I throw all these things out, see, I don't know where a 30-minute low is going to be. So you know, when I throw out an idea like that, if you all like it too, you should say, hey, Dan, it's setting up here good, basing at the low. So Visa is a call spread candidate. GE Dog, remember we've been watching him for a while. I don't know, it's not earnings, but something they like. That's a bullish gap up. Crust 36 and change, that's a bearish gap, but no pattern. Could be a call spread candidate. RDS.A. I don't like its spotting nature, but it's a bullish gap. It's clearing this entire month's of data. I just don't like the spotting nature of it. UPS 105, there's a bullish gap. That belongs. Here I got Microsoft here, Facebook here. I'm watching Facebook as a bear call spread candidate. But UPS, that's a bullish gap. And we just got to now step 2, see how it sets up. Sherwin, this was yesterday earnings, and it's too spready. RTN 166, it's a bearish gap with a sell set up on the weekly, so we'll keep that as a bear call spread candidate. Mighty Mo, who has not been mighty this year, 49.30, that's junk. See, I need to weed my garden here just so I don't get distracted. Wow, this is strange. Mike Alpha, MasterCard is strong and Visa weak. So here is a bullish gap. Wow, to 212. but that's kind of excessive. So we'll come back to that in 30 minutes. IP, 49 and change. There's no pattern. It's already been moving, but your entry was over the high of that bar. Wide range bar, 1, 2, 3, 4, 5 bars in the upper third, gap down negated, engulfing. That was your entry right there. Hershey, it's a mess. I mean, just look at it. Look at all these tails and overlapping bars. It's like it's hard to get 2 consecutive colors in a row. That is a mess. So you are gone. I have no interest in you. AYR. I have no idea what to do with that. It's just a churning uptrend. CDNS. That one I like better on a pullback. Why? Because the weekly monthly is breaking out too. So I like that one a lot better. I would like it better if it had an inside day and then we traded a 1, 2, 3. ETN 76. That's a big gap. We got to come back to it. DuPont's not having a good day. 54. That's a very bearish gap. Look at it, gapping under 3 weeks. All the bulls in this entire area are now holding a losing position. That's pain. Cop 66. It's in a sideways mess. I got no interest in that. Charter 320, bullish gap, but it's too big. Sell G. This is very, very, very bullish consolidation. And then this was a gap, an ugly red bar that churned its way higher and it got negated. So this red bar there's no bearishness to that red bar at all anymore. I don't know if this one's earnings or not, but it looks higher. Bravo X-ray, nah, it's slopping around. Baxter, 71 bucks. That's a bearish gap into this bar. So it could be a breakout failure. That's a call spread candidate, 30-minute low. APO, I can't tell where it's opening. ABC, 80.45, gapping right to the highs. Here's it's a sell setup on the weekly. But if it can clear all this resistance, it has a price void up. The old ABC. Ladam, Boeing. Boeing, I'm still watching as a call spread candidate for tomorrow. So it held pretty darn well yesterday. Doji bar, right? So Doji bar's indecision, closed right at the open with tails. So the bull and the bear is a tie. But, if it cracks, then we have all that overhead resistance on a 15-minute. X had earnings 2060, bearish gap, but support, we'll come back to it. Win 124, bullish gap. Oh, I had LVS on my watch list, remember? This is a beautiful pattern. If we could get a 1, 2, 3 on this, then that would be a no-brainer. Now look at these tails. This is indecision, indecision, indecision. A lot of supply. But you have these gap down negated, rising 20, 50 at resistance. So this prior high is meaningless to me right now. So I'm going to put LBS in the window. That looks great. Wow, there's a lot of earnings today. I'm still not done. Tesla, that's a bearish gap, but there's support. We'll come back to them. Qualcomm, that's a bullish gap from a climactic